board chairman. Social security team with us here. As you are already aware that a communication has been dispatched to our office with regards to the engagement with you on this performance audits by the National Audit Office, that we are gathered here to go through this so that we can have some discussion to discuss together and see how best can we improve upon our governance issues so that we can attain value for money in our respective jurisdiction. So I really appreciate you coming on board. The full team here in present, we are indeed very much happy. As I told you from the very beginning, we are partners in development, and I believe the state-owned enterprises cannot exist in the absence of the National Assembly Committee, especially the PEC committee that is conducting oversight on them. So as you may understand that the exercise has been a settled practice, not today. It's not a witch hunting exercise. It's to engage one another and improve upon our performance. That is the whole purpose. So I am very much grateful. Like I want to go to the next item, that is the affirmation of oath by anybody who is going to be responding to certain questions from the Social Security and even the NAO who will be doing the presentation. So the clerk will come on board to administer the oath of affirmation. Mr. Chairman, she is coming. Clerk is in twofold. Whether they all want to stand and read it together or they want to do it individually. The choice is theirs.
I do affirm that I will speak the truth, the whole truth, and nothing but the truth. So help me God. Thank you.
Thank you so much. Mr. Chairman, we are in receipt of this report from the National Audit. Then we went through the report and we have observed a lot of things, but we'll allow the National Audit Office to take us through the procedures would have been, they are going through the findings and the recommendations. Where after the findings, the recommendation, your management will also respond as it is captured here. From there, we will debate on it and look at it, how can we improve upon them. So that is the procedure. And I now give the baton to the National Audit Office, to take us through their findings.
Capital Management Development Project, representatives from the National Audit Office. It's a pleasure for me to present the report before us on behalf of the Auditor General. Now, what I will do is I would go through the introductory part of the report, and then I'll hand over to my colleague to take us through the audit findings. So what I will do is to skip the executive summary, then I'll refer you to chapter 1, page 10. I want to start with 1.2, which is motivation, because we carry out this audit for a reason. So if you look at 1.2 on page 10, we have reviewed some reports that had informed us the need for us to carry out this particular audit exercise. You can see that on paragraphs 2 and 3 of 1.2. Then the other one will be the objective of the audit, which is 1.3. The objective of the audit on the same page 10 was to assess whether Social Security, Housing and Finance Corporation ensured growth in the Social Security funds to maximize benefits to members, and that the benefits were timely and accurately paid. Then I will refer you to 1.4 on the same page, which is the audit questions. We had 3 main audit questions. Of course, we have some sub audit questions, but the 3 main audit questions are on page 10, 1.4. The first one is Social Security guaranteeing the Social Security funds growth to maximize benefits for its members? That is the first question that we ask. The second one is the Social Security Housing Finance Corporation ensuring that the members' benefits are paid correctly and on time? Finally, question number 3, is the Social Security Housing Finance and Corporation ensuring the appropriate monitoring and evaluation of claims processing? So these were the 3 main audit questions that we had asked during the course of the audit. So if you look at page 12, I would also want to read out the scope of the audit, because that's also important. So the scope of the audit covered how Social Security, Housing, Finance and Corporation manage the National Provident Fund and the Federated Pension Scheme to maximize benefits to its members and retirees in the Gambia in a timely and correct manner during the period January 2018 to December of 2021. Again, on the same page, on 2.2, that is the methodology. I would want to mention that we have reviewed documents during the audit exercise. We've also had some interviews and some discussions with staff of Social Security and some beneficiaries. And we also administer some questionnaires during the course of the audit. So, Honorable Chair, this is the methodology that we have used as far as the audit is concerned. So when you looked at 3.1, that is talking about system descriptions of Social Security Fund on page 14. I would allow you to read that on your own at some point in time. Then if you looked at page 3.2 on page 18, that is also about system description of Social Security Fund management. This is a literature that any of us can read at some point in time if we have not read it already. Then having said that, I would want us to go straight into the findings of the audit, the findings and conclusions, as well as the recommendations on page 22. This discussion would be led by Omar Sabali, Senior Audit Manager, as he already indicated. Omar will read out the audit findings and the recommendations, and then will allow, as Chair said, allow management of Social Security to read out management response, and then we move on. Thank you. Sabali.
Thank you, Mr. Drame. Mr. Chairman, once again, good morning. It's the same audit findings as like that of the NAVE. The structure will still take the same format. On top, you will see the criteria. The criteria will always tell you what should have been done or what should have been there. And then the the body of the finding would be the condition you found on the ground. And then followed by the causes, then the consequence of that finding. So I will start by reading chapter 4 on page 22, if we are on the same page. It should be on page 22. This chapter presents our finding, conclusions, and recommendation in three sections. Section A relates to the accuracy and timeliness of benefit payment. Section B relates to the funds, the fund growth, and Section C relates to the implementation and monitoring of specific initiatives implemented by Social Security. 4.1, Section A, accuracy and timeliness of benefits payment. 4.4, that is a sub to 4.1, 4.1.1, timeliness of benefit payment. The management of Social Security has developed a benefit processing schedule for efficient claim processing. This benefit processing schedule has the information requirement for the key process stages. Action officer, the date the file is received and forwarded from each action officer, the standard and actual days for each process. The maximum standard service time in this, as established by the processing schedule for each claim, is 16 working days, i.e. from the date of the claim received to the date of payment. For the period under review, Social Security claim processing on average range from 2.4 months to 4.5 months. Figure 2 shows the average processing time trend over the period under review. That is figure 2 in that graphic demonstration there. Yeah, that is the source is the audit analysis, and then based on the claim received. So figure 2 shows on average, that is the table you are seeing below. On average, Social Security was able to reduce the claim processing time from 2018 to 2021. For the National Provident Fund, the average processing time was around 3.5 months, that is 3 months, 15 days in 2018, and it slightly rose to in 2019, then fell in 2020 to 2021 to about 2.4 months, that is 2 months, 12 days. This is 350% more than the standard processing time. For the Federated Pension Scheme, Social Security took about 4.5 months, that is 4 months and 15 days, to process claims in 2018. This has reduced to 2.5 months, that is 2 months and 15 days in 2021. However, the processing time is still 369% more than the standard processing time. We further analyze the processing time into categories based on the length of processing time, and the results are shown in table 7 and 8. The tables are here below here. For the National Provident Fund, table 7 shows that for the period 2018 to 2021, only 32 claims, that is 7%, were processed within 16 days, standard processing time. 323 claimants, 67%, wait for more than 1 month before they receive their benefits. 223 claimants, that is representing 46%, wait for more than 2 months to receive their benefits. The table 8 also demonstrated some of the figures there. For the Federated Pension Scheme, table 8 shows that for the period 2018 to 2021, only 30 claims, that representing 17%, were processed within the 16-day standard processing time. 51 claimants, that is representing 29%, waited more than 4 months before they receive their gratuity benefits. The Social Security Regulation 2005 also required the corporation to observe cooling off a period for National Provident Fund claimants who go out of gainful employment before the statutory retirement age. The cooling off periods were either 3 to 6 months. From 2020, due to the outbreak of COVID-19 that put many members out of employment, Social Security amended this regulation to remove the cooling off period for all the claims. This is aimed at providing some level of social security protection, social protection for those members whose livelihood were affected by COVID-19. We analyzed the processing time of claims requiring the cooling off period during 2018 and 2019, as shown in the table 9 below. That is on page 24. From table 9, for the period 2018 to 2019, Social Security was not able to timely process 46 claims, that is 30%, for which a cooling off period of 3 months was observed. For claims for which 6 months cooling off period is observed, Social Security was not able to process 29% of the claims. Causes of the delay in the processing of the claim. Our review of claim revealed that the most significant factor responsible for delays in claim processing is the contribution gaps that were detected during the processing of the claims. Contribution gaps are months for which no contribution is made for the employee by the employer. Our review of claim showed that 30% of the claimants under the National Provident Fund has contribution gaps when they apply for claims. 19% of the Federated Pension Scheme claims were delayed because of the contribution gaps that the employer had to settle before the claimant's benefits were paid. According to an interview with the benefit unit, Social Security communicated contribution gaps to employers during the claim processing instead of when the gaps arose. This is because that is the time that is the time the corporation identifies such gaps for individual employees. Social Security has to wait until the employer settle this contribution gap before the benefits were paid to claimant. So the length of processing time depends on how quickly the employer were able to settle the contribution gap that Social Security identified and communicated. For 27 claimants who could not wait for the employers to settle the gap, had written to Social Security to carry on processing the claim without waiting for the contribution gap to be settled. Other factors responsible for the delay in the processing are in table 10. Some of them I'll just count them as they are listed in the table. Some of them are competition errors. We noted 22% of the claims delayed were the results of errors. Okay, then number 2, interview schedules. And then number 3, no schedules in the system, that is EDMS, for the months of termination. Liability letters from employers, biodata corrections. Note, these delay factors were based on our review of 29 claims that exceeded the 16-day standard processing time and had notes from other officers in the workflow to explain why the claims were delayed. We assess the extent to which the delay factors lengthen the processing claim. The results of the analysis is shown in table 11. Some of these delays are due to competition errors, biodata corrections, no schedules in the Social Security system, interview scheduling, waiting liability letters from employers, contribution gaps, etc. So table 11 shows that overall contribution gaps, missing documents, and unprovided liability letters had the biggest impact on the length of claims processing. For example, claims that were delayed by contribution gaps took an average of 129 days to process. effects of delays in the processing claim. Delays in obtaining the benefit deprive the claimant and their dependent of social well-being by they needed when they are out of employment. For example, in 2020 and 2021, delays resulted in pension arrears payment to 41 pensioners, 49% of the claims review. This means that about half of the claimant had delayed that resulted in pension arrears. These arrears range from 365 to 111,342 dollars. This means that these benefits, which may represent a significant source of livelihood for these pensioners, was not timely paid. We are not timely paid. For the National Provident Fund, 27 claimants, 42%, representing 42%, who were affected by the contribution gaps, has written to Social Security to sacrifice contribution gaps because of the frustration of delay caused by recovering such contribution from former employees. So we recommend Social Security should review all its member accounts to maintain an accurate information about their accounts. 2, initiate a program to communicate and recover all contribution gaps in respect of its existing members. 3, Social Security should ensure that remittance schedules are adequately reviewed so that contribution gaps are timely communicated to employers for prompt payment. The corporation should not wait until a claim is filed to communicate and pursue a gap in member contribution. The corporation should also provide timely accounts information to employers and employees. Then 4, overall, Social Security should initiate normal retirement benefit processing when the members are in their final years of scheme membership. This will ensure any other bottleneck is addressed before benefit payments fall due. This should therefore eliminate or minimize pension arrears.
Management response from Social Security.
Thank you, Honorable Chair. I would ask the Managing Director to call on the Director of Operations who handles such matters. Thank you.
Okay, in fact, the procedures is like this. How it is captured here, this is how you are going to respond.
Yeah.
Okay.
Okay, honorable members, thank you very much. The recommendations are noted.
Okay. 4.1.2, determination of benefits for the National Provident Fund claimants. Social Security Act 2050 requires Social Security to maintain an account for each member of the National Provident Fund and shall credit to a member account the money paid as contribution by both the employer and the employee. Social Security Act 2005 states that the amount of benefit payable to a member may be a proportion of the total balance of the member's account with Social Security together with accrued interest. Of a sample of 24 claims we reviewed, we noted that Social Security made errors in computing 21 of the claims, that is 88%. Any $1 error may result in incorrect benefit of $1 plus the yearly interest based on a compound payment, interest payment. Our review revealed that Social Security made 2 types of errors in computing claimant's benefit. The errors were posting errors and summing errors. Posting errors are errors of wrong amount being entered in the member's account. Summing errors are errors of correction. Incorrect yearly contribution calculated based on the monthly contribution of the member. Figure 3 shows the type of errors made regarding the 24 sample claims we reviewed, causes to incorrect payments. So figure 3 shows this percentage. So Social Security computerized system called Navision for maintaining members' account contributed to the posting errors. The system does not ensure data integrity because of data loss. In addition, the system is vulnerable to unintentional changes in the member contribution because it cannot notify data entry clerks that the month for which a particular contribution is entered already had its contribution entered. As a result, it will add up the subsequent entry to the earlier amount entered for that month. Therefore, Social Security must fully verify each month of a member contribution during processing of claim to ensure that accurate member accounts are used for benefit computation. Our review shows that Social Security accounts verification found that only 24% of the members' accounts were accurate during the verification. So it is probable that verification officers will make errors in the verification process since it's entirely manual process. Summing errors are the responsibility of the benefit processing officer. They should establish the total yearly contribution based on the verified member accounts submitted for benefit computation. The benefit computation were further verified by an other officer to reduce the risk of paying incorrect amount to claimants. The error led to Social Security paying 11 of the sample claimants, representing 46% benefit, that were short of their entitlement. And 10 of the sample claimants, 42%, were paid more than their entitlement. The underpayments amounted to 29,409.58, and the overpayments amounted to 39,170.05. The total incorrect payments accounted for 1.57% of the total benefit paid to 24 sample claimants. The individual incorrect payments ranges from 0.04% to 46.7% of the benefits the claimants receive. That is, the details of those ones are shown in Appendix 8. So we recommend Social Security should develop a system where member accounts are accurate as any point in time. This will ensure that rigorous and full account verifications are not needed during claim processing. The benefit unit should strengthen competition verification regarding yearly contribution before signing off the benefit computation report.
Management respond.
Honorable members, the recommendations are in order, but I just want to make a statement. When I came to Social Security and this thing was available to me, when I read, I told them, did somebody tell them that what we are doing, that's why they wrote this thing? Because the things mentioned are in order, but already great minds think alike. So I think was already ahead of this now as we are talking now. But because the report completed a period behind, that is why. But as we are talking now, these things are history. We are working on our SMIS, what we call SMIS. It's an automated processing system.
Thank you so much, MD.
Thank you very much.
I just want to observe, like how it is written in the report. Okay. Let's respond. The other part will come to a discussion where you will be given the opportunity to make some clarification.
Thank you, Honorable. Then noted.
Okay.
4.1.3 on page 29, if we are on the same page. Yes. Social Security Act 2015 requires Social Security to collect contribution from employers and can apply penalty charges where payments are delayed. The corporation can further take legal actions to collect contribution for defaulting from defaulting employers. Of a sample of 222 claims, 65 cases representing 30% of the claims had contribution gaps identified during the claim processing. Contribution gaps are months for which no contribution is paid for the employee by the employer during the scheme membership. The contribution gap advice slip which is sent to the relevant employer, detail the relevant period for which no contribution is made for the claimant. Contribution gaps mean that Social Security had not collected the monthly contribution from the employer. Social Security communicated contribution gaps to employers during claims processing instead of when the gaps occur. This is because that is the time that Social Security identified the gaps for individual employees. Therefore, claimants only realize that they have contribution gaps when they had claims for their benefit. This untimely communication of the contribution gaps to employers resulted in lost contribution for Social Security. Based on the contribution gaps that Social Security raised for 65 claimants at the time of processing their claim, the corporation has lost $852,122 in contribution. This represents 8% of the total benefit paid to the 65 claimants that had contribution gaps. In addition, the contribution gap reduced the membership benefit entitlement. From our review of the contribution gap advice slips that Social Security raised during the processing claim, we noted that claimants lost contribution ranging from 75 to 326,329, or 4% to 108% of 0.04, yeah, to 108%.
1,008%.
Yeah, 1,008% of
Is
the
it
benefit.
a typo or?
No, it's correct. It's correct.
Okay.
The typo is mine, and the error is mine in pronouncing the
Okay.
figure of the benefit they receive. So, recommendation. We recommend that Social Security ensure that the member accounts are timely verified, and any contribution gap that is identified is communicated to the employer on time.
Management response.
4.1.4 determination of the benefit for the Federation Pension Scheme claims. Rule number 4 of the Federated Pension Scheme gives the benefit formula for a member at which at least 10 years of pensionable service. That's the formula there. According to the rule of the Federation Pension Scheme, Social Security Act 2015, the retirement benefits are computed based on the final pensionable salary of the contribution member. In the case of a member or former member whose salary changes by at least 20% in 12 calendar months before the date he or she has last in service, and the changes was not part of a general pay increase allowed by the employer, pensionable salary is the average salary over the 12 months preceding the retirement, as the managing director may approve. From our review of claims, we found that the completed months of service were accurately determined by Social Security in the computation of the benefits. However, we noted problems in the way the final salaries were determined in the benefit formula. From our review of claims, we noted that Social Security derived the final salary to use in the benefit formula by multiplying the salary of the month of termination by 12. The interview with the benefit unit corroborated this fact. For a sample of 50 claims, we found that 5 claims representing 10% were not computed based on the final salary of the claimants. Table 12 shows the calculation we did. From our interview with the benefit unit, these differences arose between Social Security because Social Security believed that the employers had intentionally increased the salary few months before retirement. Therefore, Social Security concluded that this increase had to be ignored and instead used the salary before the salary increase is made. However, from our review of claims, we found that Social Security has not consistently treated claims where the salary is changed a few months to termination. Table 13 shows this example of cases treated differently, even though the salaries were recently changed prior to the termination. Table 13 shows that the claim number 1 to 4, Social Security had not used the final monthly salary of the claimant because the salaries were recently changed prior to the retirement. On the contrary, Social Security had used the final monthly salaries for claimants number 5 to 7 despite the recent changes in the salaries. This inconsistency in the way recent changes to salary were treated is caused by Social Security not establishing a common reference point that determines the extent to which an increase in salary can be considered appropriate for use in the benefit formula. From our interview with the benefit unit, it was revealed to us that benefit officer checked salaries of members in the last 3, 4, or 6 months to ensure that the recent salary increase are not in use in the benefit formula. Therefore, benefit processing officers uses their discretion to determine whether a recent salary increase is appropriate for benefit computation. Furthermore, the benefit officers did not document this procedure of verifying salaries in the last 6 months. Therefore, it is impossible to perform a review of whether the benefits officers appropriately applied verified salaries in the last 6 months. The use of wrong salaries in the benefit formula resulted in claimants being paid wrong benefits. From the 8 claimants that were not correctly based on the final salary multiplied by 12, 6 resulted in underpaid benefit and 2 resulted in overpaid benefits. Table 14 shows or demonstrated the text on top. So we recommend Social Security should use some sort of averaging system to determine the pensionable salary. It is important to use a reference period that is sufficient to provide an effective safeguard against salary manipulation. Benefit officers should document the verification of salaries over the reference period. To minimize the risk of human error in the computation, we recommend that during the first computation, the benefit officer should provide reference of the final salary of the claimant. Example, the page of the remittance schedule on which the claimant's name appeared, the numbering, etc. This will provide a quicker and more efficient confirmation by the verifying officers. Yeah.
Management respond.
Thank you, Honorable. A recommendation noted with the following comments. For customer with SSHFC number 1044662, there was a typo error on this computation. GMD 314,232 is the correct annual gross salary and not GMD 214,232. For customer with SSHFC number 10,444,2, this claim was sent 3 months prior to member's retirement. As a result of Project 59, the computation was done based on the latest available schedule, in bracket August 2020. Because the employer was not up to date on contributions, then as well, the other schedules came late. The gross salary for the same month, in bracket $33,300, was also indicated on the SS2 form by the employer, as well as the pay slip. Completion date was October 1st, 2020, while the schedules from September to November 2020 were received and scanned in December 2020. For customer with SSHFC number 1057152, the completion was done based on the latest available schedules, in bracket February 2020, and the gross salary was GMD $17,065.81 burus. The gross salary used was consistent for both January and February of 2020. Computation date was June 2nd, 2020, while schedules for March 2020 were received as of June 8, 2020. For customer with SSHFC number 1044627, the computation was done based on the latest available schedules in bracket January 2021, and the gross salary was GMD $21,281.25 burus. Computation date was April 14, 2021, while the rest of the schedules were received as at April 26, 2021. For customer with SSHFC number 1051506, the computation was done based on the latest available schedules in bracket January 2021, and the gross salary was GMD $12,961.75 burus. Completion date was April 19, 2021, while the rest of the schedules were received as of April 26, 2021. Please see addendum 2 for further details.
Thank you, Director. Mr. Chairman,
Yes.
like I said in our previous sitting, once they provide their management response, there is always a follow-up option for the auditor to comment on what they have said. So that's why you are seeing an audit comment coming there. So we said we have reviewed your management comment, and the finding is adjusted to reflect the cases that are not consistent with the assessment criteria. Management response point to the fact that these claims were processed based on the available contribution schedules as at the time of the processing the claims. However, interview with the benefit processing officers revealed that the salary increase prior to retirement was sometimes ignored because it was felt that these increases were made for retirement purposes. Then we reiterated that we further recommend the Social Security liaise with the employers to obtain the most recent contribution schedules that is relevant to the claim being processed. So we move on. 4.1.5, pension increase for pensioners. The rate increase. Rule 19 of the Federated Pension Scheme states that Social Security may, from time to time, increase the level of pensions payable under its pension schemes. This increment is determined by the following consideration. 1, the general rise in the cost of living. 2, the actual salary and wages increase throughout the Gambia. And 3, the inflationary effect on the level of incomes. However, the increase in the pension shall not be more than the latest estimated rise in earnings made by the actuary. The estimated rise in earnings made by the actuary for the relevant period are as follows. So, below the table, we found that Social Security has not increased pensions as in line with the estimated rise in the earnings made by the actuary. The pension increase rate ranges from 2.7 to 33% for the 2018 increase and 5% to 65% for the 2022 increase, depending on the level of the monthly pension. Figure 4 shows those percentages. That's a graph there demonstrating what we were saying. From figure 4, the estimated rise in earnings made by the actuary is represented by the green line. Any pension increase rate above the green line represents pension increase rate that were above the actuary's estimated rise in earning. For 2018, the pension increase, i.e. the blue line, the appropriate pension increase rate were only applied starting from monthly pension earning of 20,000 For the 2022 pension increase, i.e. the orange line, the appropriate pension increase rates were only applied starting from the monthly pension earning of 50,000. Pension increase rates for monthly pension below 20,000 for 2018 increase and 50,000 for 2022 increase were not in line with what the actuary made. Appendix 6 to this report. From our interview with Social Security, the 2019 and 2022 pension increase rates were determined by the management and approved by the board. The maximum dollar increase was said to be based on the amount affordable and sustainable by Social Security. Percentage increase were established by trial and error until the most successful rate were established for the different bands of existing pensions. The higher the pension band, the lower the percentage pension increase. From our review of the board paper on the approval of the pension increase rate, we noted that the pension increase proposal has stated that the latest actuarial valuation report has backed the pension increase proposition up to 65%. However, our review of the actuarial valuation report 2020 has only recommended using a uniform rate of 4.5% per annum in the long run for pension increase. Furthermore, the pension increase proposal has not made mention of the estimated rise in earnings made by the actuary for the board's consideration. This would have informed the board on the maximum rate of pension increase allowed by the Social Security Act 2015. From our interview with the board, it was revealed to us that Social Security uses higher rates than the estimated rise in the earnings made by the actuary because they felt that pensions are so small for some pensioners that using the same rate will result in insignificant increase by using a low rate for low pension earners or very large increase by using the higher rate for higher pension earners. For example, using 5% across will result in a monthly increase of $45.50 for pension earning of $910. Conversely, using 50% across result in an increase of $20,000 for pensions earning of $40,000. However, Social Security already had a system called guaranteed minimum pension that was aimed at protecting pensioners from pension earning that cannot sustain their livelihood. Guaranteed minimum pension assures that no pensioner earns below a certain monthly pension determined by management. This guaranteed minimum pension is adjusted when pensions are reviewed. The minimum pension for January 2018 to December 2021 was $1,210.30 and was revised to $2,000.2 effective January 2022. Social Security increased rates more than the estimated rise in earnings made by the actuary, resulted in the increase of pension costs. For every $1 increase by 50% instead of 6% has resulted in an incremental annual pension cost of $5.28. A pensioner receiving $5,000 resulted in an additional pension cost by $26,400 per annum that would have been avoided had the corporation used the estimated rise in the earnings made by the actuary. Timeliness of pensions increase. According to an interview with Social Security, the corporation review pensions for an adjustment every 3 years so that the pensioners are effectively protected from inflation in the country. The pension increase review is tied to the actuarial valuation dates. Accordingly, the review should be scheduled January 2018, 2021, and so on. For the period under review, Social Security carried out 2 pension reviews, one in 2019 and the other in 2022. The pension review that was supposed to be carried out in January 2018 was done in 2019, and then the pension increase was applied retrospectively. This resulted in pension drawbacks, payments of 13 months to active pensions. The pension review that was supposed to be paid in January 2021 was made in January 2022. However, this increase has not been applied retrospectively because Social Security Management decided not to apply this increase retrospectively because the federated pension scheme has deficits of about 42 million. According to an interview with Social Security, pension increase are not timely implemented because the rate at which the pensions are increased is tied to the actuarial valuation report. These reports are currently not timely published after the end of the year to which they relate because they rely on the audited financial statement which are not readily available for the timely actuarial valuation. For example, actuarial valuation report as at 31st December 2017 is published in August 2019. So when the pensions were reviewed, it was applied retrospectively to the active pensioners. Delaying in pension increase means that Social Security has not timely provided the level of benefit that was aimed at protecting pensioners from rising cost of living. So we recommend Social Security should increase pension beyond the estimated rise in earning made in the latest available actuarial valuation report. When new minimum pension is established, existing pensioners earning below the minimum pension can be moved to the new minimum pension. However, pensioners who receive above the new minimum pension should not earn more than the estimated rise in the earning of the actuary made. Social Security should use the latest available actuarial valuation report in their pension review without waiting for a new report to be published.
Management respond.
Thank you, Honorable. Noted.
Section B, as promised, Mr. Chairman. This is section B of it. Fund growth to maximize members' benefit. 4.2.1, interest payment to members of the National Provident Fund. Social Security has the mandate to initiate investment policies that will yield reasonable returns to its members and undertake investment considered beneficial to the members. We benchmark returns to members of Social Security with the interest rate that the Social Security Fund of Uganda paid to its contributing members, which is 12%, 12.5%, and 9.65% for the financial year 2020 to 2021 and 2021 to 2022 respectively. Social Security paid similar rates between 1994 to 2010. The period 1994 to 2010 represents the most suitable stable interest rate payment by the corporation. The board should establish a Social Security committee or committees that have the function to consider and review investment policies and decisions that the corporation undertakes to maximize the welfare of the contributing members. For the period 2018 to 2020, Social Security has only paid interest to members in 2020. The interest paid to members in the year 2020 was 84.8 million. This represents 2.09% interest rate to members on their accounts. The corporation has not paid interest to members for the period 2018 and 2019. For the years 2013 to 2015, the Social Security paid rates in the range 0.19% to 0.5%, 0.19% to 0.5%. For the years 2016 to 2019, Social Security has not paid interest to members on their account. Figure 5 shows the decline in the interest rate over the period. That is the graph below. Figure 5 shows that shows that between 2014 and 2019, Social Security has paid interest rate at 0% or near zero. From 2020, the corporation has started paying interest at the rate of 2%. The fall in the level of interest paid to members is attributed to the performance of the investment portfolio of the corporation. Table 16 shows the investment portfolio that the Social Security held in the National Provident Fund and the Federated Pension Fund. The table shows the text I was reading. And then below it are the notes explaining the figures on there. The Social Security Committee should have the function to consider and review investment policies and decisions. However, according to the internal audit report of the Social Security titled Benefit Processing Audit for the period July 2019 to December 2019, the Board Investment Committee has not been active as of 31st December 2019. According to our review with the Department of Finance and Investment, the investment committees were last active in 2018. This was because of the change in the corporation leadership. Therefore, investment decisions were taken by the board based on the recommendation made by the managing director and investment department. This has impacted negatively on the ability of Social Security to effectively undertake investment that maximize returns for the members. As a result, according to the internal audit report on investment dated 23rd October 2019, the Social Security investment decisions were normally given to select committees on an ad hoc basis. The dormancy of the committee also affected monitoring of investment. Our review of the internal audit report on the investment revealed that Social Security has not effectively monitored its investment portfolios. For instance, for the year 2019, investment properties accounted for 34% of the investment portfolios of the NPF. Social Security activity report for 2019 stated that the return on investment properties portfolio was 25.4%, being the highest return on any portfolio held by Social Security. However, the internal audit report on investment has stated that the Department of Finance and Investment has not maintained a proper documentation and review of the annual tenancy agreement for one of the investment properties, that is the NTC complex, since January 2015. This has resulted in 12.1 million areas owed to Social Security by the tenant of this property. For the year 2019, this represents 8.9% of the total income that the corporation reported, and it is 137.5% of the rental income for investment properties that the corporation held. According to the internal audit report, the failure to effectively collect rents due on investment properties held by the Social Security was attributed to Social Security not actively pursuing the tenant for the rent. For example, or for instance, the tenants that were occupying the NTC complex were last officially communicated to since January 2015, i.e. 4 years about the rent payable. The non-payment and low interest rate affect the growth of the members' fund. Members' funds are affected by contribution less benefit and an interest paid to members. Social Security has seen growth in members' fund for each of the years under review. However, the growth in the members' fund for the years 2018-2019 is wholly due to member contribution net of benefit paid to claimant. This is because no interest is paid to the members. For the year 2020, the interest on members' fund accounted for 27.2% growth in the members' fund, and then the contribution net of benefit accounts for the other 73.8%. Figure 6 shows the demonstration. From figure 6, The members' fund for NPF has grown from 3.8 billion to 3.9 billion, 3%. In 2019 and to 4.2 billion, 8% in 2020. The growth in 2021 is wholly due to a contribution net of benefit because interest rates were not yet declared as at the time of this audit. So we recommend that Social Security establish a structure that ensure that investment policies, undertakings, and performance are regularly reviewed. This structure should ensure that investment portfolios are well diversified, and then the performance of the portfolios are effectively monitored and reported so that the board has timely information for corrective actions.
Management response.
Thank you, Honorable. Recommendations noted with the following comment. As per the 2019 internal audit report, medical and health rent owings amounted to $4.1 million out of the $12.1 million contained therein. The auditors reported that the corporation has not effectively protected the welfare of the members for the period under audit. However, we need to put this into context because we were affected by the impact of the various executive directives amounting to over $2 billion Gambian dollars in principle, recovery of which is still a challenge, not including the lost interest, which could have amounted to over $315 million. Here is the list of investments that were imposed on the corporation through executive directives. 1. Galia, in bracket, 2 ferries. 2. Qatari, the GFFI, that's our investment at the Kamalo, called GGFFI. 3. Gamco. 4. Police barracks. 5. GCA, the Gambia Civil Action Authority, fire tenders and ambulances. 6. GGC loan guarantee. Number 7, GRTS satellite. Number 8, GIA Hatch. Number 9, NAWIC loans. Number 10, Kanila housing project. All the above investments are red herrings, including 1 NAWIC loan, in bracket, bill, own, and transfer, bracket closes. The amount of this loan is $74,517,000. The overall recoveries to date, in bracket December 2022, is $384,225,843, 10 budu, leaving an outstanding amount of $1,615,674,156.90 budus.
Okay, thank you, MD. 4.2.2 Administrative expenses of the National Provident Fund. According to the pension valuation report for the Federated Pension Report by the World Bank, Social Security Fund in the Sub-Saharan African like Social Security were not expected to spend more than 10% of their contribution on administrative expenses. We benchmark against Social Security and National Insurance Trust of Ghana, which has declined percentage of contribution revenue on the administration and operational expenses for the period 2017 to 2020, from 16% to 10%. Our review of the financial statement for the period 2018 to 2021 showed that Social Security has spent between 13 to 23% of its contribution on administrative and staff costs. This spending rate is unstable due to the changes in member contribution. When the administrative and staff costs are individually analyzed, the gap between the administrative and staff costs widened from 2019 onwards. figure 7 shows or demonstrate that in the form of a graph. So from figure 7 showed that the total administrative costs, administrative and staff costs were as percentage of contribution currently stands at 13%. Administrative costs as percentage of contribution progressively declined from 2018 to 2021. On the contrary, staff cost is unstable, with the biggest change occurring in 2019. We recommend that Social Security devise cost control measures that ensure that total administrative and operational expenses are kept at or below the 10% of the member contribution, or it can otherwise efficiently use its resources to collect more contribution revenue.
Management response.
Thank you, Honorable. Noted.
Yeah, man, move to the other section, that is section C of the findings. Implementation, monitoring, and evaluation of processes. 4.3.1, monitoring delay factors in processing claims. Various strategic management authors have highlighted that organizations should monitor and evaluate their performance for business success. For example, the balanced scorecard developed by Kaplan and then Norton in 1992 states that organizations should develop indicators for different aspects of operation against which performance is measured. Similarly, Johnson scholars and within include performance monitoring and evaluation in their 6-step process for developing a critical success factor. Social Security used 2 different systems of documenting and monitoring claim process during the period 2018 to 2021. Number 1, for the years 2018 and 2019, Social Security used a paper-based benefit processing schedules attached as an appendix to this report for documenting the timelines of key processes in processing claims. Number 2, for the years 2020, 2021, the corporation moved from the paper-based processing schedules to a computerized system called the workflow. This workflow captures the actual start and end dates of each activity in the processing claim. For the years 2018 and 2019, when the Social Security was using the paper-based processing for monitoring claims processing, the benefit officers are required to document the actual time spent on each stage of the process. However, we found that officers have not documented the actual duration of each activity in the claim processing and why they took more time than the allocated duration. 4 departments of Social Security were involved in the claim processing. However, no specific department is tasked to ensure that the benefit processing schedule is accurately and fully completed. We noted that for the period under review, Social Security maintained spreadsheet record of members' claims that document the claim application and payment date. However, the corporation has not analyzed this data to help understand how long claimants wait before they receive their benefit. Furthermore, the corporation did not also document and analyze why claims were taking longer than the standard processing duration to process. The information provided by officers about the actual time they spend preparing a particular activity, performing a particular activity, is aimed at establishing bottleneck activities in the processing claims. So by failing to provide information on the actual time officers spend on each activity and why delays occur, Social Security was not able to document delays factors in claim processing. Though, according to the interview we had with the Director of Operations, delay factors are mostly member, financial, and bio data problems in the system. However, other factors responsible for delay were overlooked. As a result, Social Security do not fully appreciate other factors other than the financial and biography data problems as delays. This impacted evidence-based decision to address bottlenecks activities in processing claims as Social Security focus mainly on addressing problems of bio and financial data. Therefore, problems such as error of competition and scheduling interviews are overlooked as problems causing delay. Without evidence-based information on the factor responsible for delay in processing claims, appropriate corrective measures could not be taken to address all delay factors. Furthermore, it also deprives the top management and the board the opportunity to provide an effective oversight of how well members and pensioners are served, since reasons for delay cannot be related to specific area of operation. Therefore, we recommend Social Security should identify and document delay factors for each claim that happens to go beyond the desired processing length that the corporation determines. The aggregate of these delay factors and bottleneck activities will provide a useful insight into design and implementation of initiatives to correct problems causing delay in processing claims.
Thank you. Management response.
Thank you, Honorable. Noted.
I proceed. Yes. 4.3.2, the implementation and monitoring of Project 59. Project 59, implementation of Project 59. In 2018, the corporation introduced a program called Project 59. The program was planned for full implementation in 2021. Project 59 is an initiative to process members' retirement benefit when they reach the age of 59, so that the retirement benefits are timely collected when the members reach the statutory retirement of 60. According to the interview with the Department of Research and Policy Planning Project, Project 59 entails sending letters in the last quarter of the year to the respective employers, detailing the name of their employees who are above the age of 59 and due for retirement in the next 1 year. The employer were expected to provide accurate data of those employees to Social Security so that the benefits are paid on their 60th birthday. According to our interview with the Director of Operations, these letters were only dispatched to the employers in 2019 quarter 4. So, for the years 2020 and 2021, the project was not implemented. Social Security claimed that the employers to which the letters were sent had not cooperated with the corporation as they failed to respond to the letters, i.e. the information requested. We could not review the letters because Social Security has failed to provide a copy of the letters that they sent to the employer. However, according to the interview we had with the Director of Operation and Research and Policy Department, the letters did not contain specific information requirement that the employers are expected to provide in respect of each employee. Furthermore, Social Security faces data problems mainly in the National Provident Fund. This was acknowledged by the Director of Operation. However, an interview with the Director of Research and Policy Planning revealed that the Project 59 letters were sent mainly Federated Pension Scheme members' employers. The failure of Social Security to fully implement Project 59 has led to continued delay in processing claims. This is because the financial and biographic data problems are mainly resolved during processing of claims. This resulted in delay in the processing of claims as highlighted previously under the finding relating to timeliness of benefit payments. Monitoring and evaluation of Project 59. Various strategic management authors have highlighted that organizations should monitor and evaluate their performances for business success. For example, the Balance Scorecard developed by Kaplan and Norton in 1992 stated that organizations should develop indicators for different aspects of operation against which performance is measured. Similarly, Johnson and Scholes include performance monitoring and evaluation in their 6-step process for developing a critical success factor. According to an interview with the Director of Operations, there was no evaluation of Project 59 for the period under review. From our communication with the Director of Internal Controls through email, Social Security do not develop an annual operational activity plan for the period under review. Operational activities are captured in budgets, which provides financial estimate for the operations. The budget have not documented how Social Security would implement and monitor Project 59. Social Security has not also developed a specific plan for how the project should be monitored and evaluated. As a result of the failure to evaluate the program, Social Security was not able to conclusively determine whether the project has improved the processing of claims. It also resulted in corporation failing to identify reasons why the employers had failed to respond to Social Security letter and how it can address these deficiencies. So we recommend Recommendation: Social Security should revise Project 59 and develop a comprehensive plan that defines the responsibility of each department. The plan should also include performance indicators to enable useful evaluation of the project. Specific information requirements should be included in the communication with employers regarding their employees retiring the following year. This would require Social Security to have specific information that is missing and what needs to be confirmed for each member by the employer or employee. Social Security should monitor and evaluate the implementation of Project 59 and lessons drawn for improvement.
Respond.
Thank you, Honorable. Noted.
I proceed, Mr. Chairman. 4.3.3, the implementation and monitoring of data cleansing exercise. The implementation of cleansing exercise. Social Security Activity Report 2018 stated that the corporation started a data cleansing exercise to remove or modify data that were incorrect, irrelevant, incomplete, duplicated, or improperly formatted in the database. The objective of this exercise is to ensure that the data which is to be migrated to the Social Security Management Information System, SSHFC, is accurate and its integrity is not compromised. However, our interview with the Social Security revealed that this exercise has been dormant for the period 2019 and 2021. Figure 8 details the description I've given in the text. According to an interview with the verification unit, they continue to maintain the regularized member account in a computerized system called the Navision system. That initially created the problem of inaccurate member data. So the regularized data is still vulnerable to unintentional changes. According to an interview with the Department of Research and Policy Planning, the exercise was stopped in 2018 when the leader of the team carrying out the data cleansing had his contract expired. No other team was formed to continue the exercise. The failure to get the data cleansing exercise actively implemented for the period 2019 to 2021 prevented the Social Security from having accurate financial and biography data of its members. As a result, problems with claimants' financial and biography data were only resolved during processing of their claim. This resulted in the delayed benefit payment, monitoring, and evaluation of data cleansing exercise. Various strategic management authors have highlighted that organizations should monitor and evaluate their performance for business success. For example, the balance scorecard developed by Kaplan and Norton in 1992 stated that organizations should develop indicators for different aspects of operation against which performance is measured. Similarly, Johnson and Scape and Wilton included performance monitoring and evaluation in their 6-step process for development of a critical success factor. However, through interview we had with the various departments involved in data cleansing exercise, Social Security has not evaluated this initiative. Furthermore, Social Security did not document the number and list of members' data that were corrected. The exercise was revived in 2022. However, the team assigned to continue the data cleansing from 2022 continue not to document list of members whose data were corrected. As a result, the verification unit tasked to work on the financial data cannot say the progress it has made. The team says that the regularization of the member account is being carried out on employer basis. However, this could not give us the number of employers that they had completed so far. From our communication with the Director of Internal Controls through emails, Social Security do not develop an annual operational activity plan for the period under review. Operational activities are captured in budget, which provide financial estimate for operation. These budgets did not capture how activities are to be implemented and monitored. Social Security did not also develop a plan for how the data cleansing exercise was to be monitored and evaluated. In addition, Social Security has not set targets regarding the data cleansing exercise against which performance is measured. The activity report for 2018 to 2021 reported that the exercise will continue until it's fully migrated to the new IT system. However, no specific targets were set for this operational period. The failure to monitor and evaluate the data cleansing exercise has resulted in Social Security not knowing the level of progress it has made in correcting its member data or its impacted processes of claim. However, the corporation reported for the period 2018 to 2021 that the exercise has positively impacted processing time of claim. Furthermore, lack of monitoring and evaluation results in Social Security not being able to identify deficiencies in the implementation of the initiative or hold the team accountable for the work assigned to them without having knowledge of the deficiency in the exercise. Social Security was not able to take timely action to ensure that the exercise continued after 2018 data cleansing team was dissolved. In addition, the failure to establish performance indicators for measurable targets for the exercise resulted in Social Security not being able to effectively evaluate the effectiveness of the initiative because there was no standard against which progress is measured. We recommend 1. Social Security should maintain a record of member employers and employees whose data are regularized. 2. Social Security should keep the regularized financial records in a way that they are not vulnerable to unintentional changes. 3. Social Security should develop a monitoring and evaluation mechanism for the exercise. These include setting targets and evaluating team on this, and this effect the initiative has on claim processing time.
Management response.
Thank you, Honorable. Recommendations noted with different comment. The data cleansing exercise has never stopped since its inception. The exercise has been ongoing and the team leader has not been terminated. Currently, we have augmented the team by introducing the senior staff of the department to handle the exercise. The scope of exercise is limited to bio and financial data of the members. Please refer to the attachment of Jamal McNa's employment contract provided.
Again, Mr. Chairman, we follow up to their management response. Maybe what they provided, and this is how we want to look at it. We received no evidence that the data cleansing exercise was active for the period 2019 and 2021. Figure 8, 2019 to 2021. Figure 8 was based on a testimonial evidence since no work on the data cleansing is documented for the period under review.
Thank you so much for the wonderful presentation.
Yeah. Fine.
Yes.
Yeah.
Yes.
Okay, with your permission, thank you.
Number.
Appendix 10, SSHFC Management's General Comments. Number 1, with the new Social Security Management Information System, in bracket SSMIS, that would be launched later this year, most of the concerns raised by the auditors would be addressed. Number 2,
Yes.
the corporation is currently working on host of the continuous improvements, such as introduction of performance management and development system, in bracket PMDS, production and enhancement of operational manuals and policies, in bracket example investment policy, benefits manual and compliance manual, bracket closes. Amendment of the SSHFC Act 2015 and its regulations, and the sign of the performance contract with the government. Number 3, we implore National Assembly and government ministries, in bracket Attorney General's Chambers and Ministry of Justice, Ministry of Finance and Economic Affairs, and the Ministry of Trade, Industry, Regional Integration, and the reinstatement of SSHFC certificate in the business clearance process. Thank you.
Thank you. You're welcome. Thank you so much with your team. Honorable Chair, this will take us to the next activity that we are going to embark on. I will now open the floor for members to ask questions, and make sure if you're asking the question, you quote the number and the page. Hmm? No, it's okay. It's okay. We will start. Look at the big one before this presentation. Questions that are already. Yeah, that's okay. No, that is okay. You have something? Yes.
Thank you very much for giving me an opportunity to do this quick intervention. My question is going to point 4.1.5 on the pension increase for pensioners. Page 34 rather. Page 34. That's where pension increase for pensioners is, but on the paragraph, the paragraph that you found, you find the paragraph in page 36, second or the third paragraph, which reads, however, Social Security already had a system called guaranteed minimum pension that was aimed at protecting pensioners from pension earnings that cannot sustain their livelihood. Guaranteed minimum pension assured that no pensioner earns below a certain monthly pension determined by management. This guaranteed minimum pension is adjusted when pensions are reviewed. The minimum pension from January 2018 to December 2021 was 1 million, is it 1,000? Okay, thank you very much. $1,210 is 30 butut and was revised to 2,002 butut, effective January 2022. So, and management's response and auditors recommended that Social Security should not increase pensions beyond the estimated rise in earnings made in the latest available actuarial, is that okay? Actuarial valuation report. So, and the Social Security's response, management response to this was noted with no explanation. And which means Social Security has agreed to the audit finding, which says, you've agreed to the audit finding, which says Social Security already had a system called guaranteed minimum pension that was aimed at protecting pensioners from pension earning that cannot sustain their livelihood. The management has agreed to say noted, and that this made it difficult for us to definitely assign our question to any of their response, to say this is what you've responded, and we think this was supposed to be done and that was not done. But they've just said noted, which means you have consented to this audit finding, which was not okay. So it would have been better, Honorable Chair, if Social Security could have given us an opportunity to see their views as far as the audit reports are concerned. But to just say noted could only allow us to say we need a situation report for these things, how the issues prevail today. But having tell you that you are doing something actually which definitely cannot help the pensions, in their livelihood, it's definitely something that is a cause of concern for anybody. Our senior citizens who serve the country. Honorable Chair, I know it's important we manage time, but allow me to literally, direct this a little bit on this.
Can you allow them to react to this, since they are present? Allow them to react. He has already reacted. Yes, can we hear from, Honorable Chair, can we hear from the management?
Yes, Honorable Chair, but I will save my remarks for after the technical people have answered the Honorable's concerns.
Before you go further, with due respect, Honorable, can you summarize your what is bone of concern here? You made a general statement which was good, but in order. But what is your concern, key concern? Just hitting it on the head. Sorry for taking you back. The bone of concern, and they had it at the time.
Yes.
Okay, my concern here is you have agreed to auditor's finding, which says, and again, I have read it over and over, but I am going to do that again, with no other explanation. The audit finding, which says Social Security has already had a system called a guaranteed minimum pension that was aimed at protecting pensioners, at protecting pensioners from earnings that cannot sustain their livelihood. Guaranteed minimum pension assured that no pensioners earns below a certain monthly pension determined by the management. This guaranteed minimum pension is adjusted when pensioners are reviewed. When pensions are reviewed, the minimum pension from January 2018 to December 2021 was, it says, $1,210.30 and was revised to 2,002 butut effective January 2022, and including the rest. And they recommended that. They recommended that Social Security should not increase pensions beyond the estimated rise in earnings made in latest available actuarial valuation reports. They said you should not do that, and you've agreed you should not do that because you said noted. They continue to say when new minimum pension is established, existing pensioners earning below the minimum pension can be moved to the new minimum pension, and you've agreed. However, pensioners who received above the new minimum pensions should not earn more than the estimated rise in earnings that the actuary made. You've noted that one also to say agreed. That's my view. Your noted means agreed. That's my view. And Social Security should use the latest available actuarial valuation report in their pension review without waiting for the new report to be published. And the management stated, noted. Where these issues not relevant that calls for any explanation, whether these things were happening before and implemented or in the process for implementation, or they're not relevant.
Okay, good afternoon. I just wanted to explain here that according to the actuarial valuation, what they are recommending is that we have increased pensions by more than we should have done, which means we have put the senior citizens on a better place than where they should be. So what we are explaining here is that we agree that yes, we have increased pensions by more than what we should have done, because if we didn't do that, the pensioners would be losing more or they will be suffering. So what we are agreeing is that yes, we have done that, but we have done it because management has a policy that we should not allow pensioners to receive less than a minimum that can at least make them survive. So, and I don't think that is bad for the senior citizens, although we have done a study to show that it is sustainable. That's why we did the increase. So we noted and agreed that yes, we have increased it by more than what we should have done, but it is sustainable. I don't know if I answered your question.
You've answered, but I'm not satisfied.
Okay, any
Yes,
further questions?
but
Okay. Chairman.
for us to know the sustainability, you don't tell us whether it's sustainable or not. You've never told us whether it's sustainable. For us to know the sustainability of this increment would have been explained in your management response. But your response is very vague to say noted. We've done this, whether it is in line or not in line, that is not known. But when you said it has gone beyond, but you just, you want to help the senior citizens. But in helping the senior citizens, are you doing the right thing? It's in line with the policies. Indicate to us that we're doing this, but it's in line with the policies. And also you indicate what you've explained, but you've not tell us that. So you're noted, I don't understand what noted means.
Thank you very much, Honorable. I think it is better for us to see this in its context. The context here is the increase was due to the skyrocketing prices and the need that these people had never had any increases in their pensions. People were having well below 1,200 pension a month, and a bag of rice then was more than or close to $1,000. It was understood that if we had to follow the actuarial report, as could be stated, the increase would be a minimal under $100. What would $100 do for a pensioner who relies heavily on this regular income to sustain him or herself? The board took it upon itself first to look at the sustainability of any increases that would be meted out to the pensioners. Further down in the report that the auditors do, you could see that the increases were the lowest category had the best 65 or whatever, 95%, 65. And the highest person had about 5%. We have to equate. I hope I'm not speaking as somebody who never had the heart to uplift the people. But if we had done what the actuaries have prescribed, we would still be where we are before we even started. That is, whatever is increased would not even take a food to the table. We found it necessary, after doing some calculations, to do the increase in that the band was from 65 to 5%, and it's in a reverse order. The lowest gets 65%, and the highest gets 5%. In a nutshell, we are looking for those who are really, really struggling to make food on the table. And I think I would call it a blessing in disguise for the pensioners. We could not go and say the actuary report says we should give you 5%. We cannot face the pensioners and tell them that, because they expected us to look after them, and it has to be sustainable. After we had done all our calculations and do our rethinking, we did this banding from 65 from the lower to 5% to the most the person with the most pension. And I think in the table you could see that is even one person. It's not a whole chunk, but the chunk of the increases was with or for the people earning less. So just to allow Mr. Chairperson, I want to, fortunately, a board member who represents the pensioners are here, and I would like him to speak on this matter, if you don't mind.
Our work as representatives is to protect our elections, including voters, those we are talking about.
Yes, I'm coming. If you could recall, I've said we've done calculations and found it to be sustainable. That is the sustainable part. Yes, we have a guaranteed minimum, and the guaranteed minimum is what is prevailing now. Those who, the minimum now they are earning is 2,020. The minimum. So the guaranteed minimum is there that you were looking for. The guaranteed minimum is now $2,002. That is the guaranteed minimum from what it used to be $900 and something.
Thank you, Mr. Chair. I think where the member is coming from, the emphasis is laid on the response, because this is a major audit findings, and that is why it has been flagged. But the interesting part of it, if you look at your response, you only stop at noted. I didn't mean you go further to make detailed explanation that would have saved the emerging questions that are arising. So like this is what we are saying. The next time, like putting only noted without any further explanation is another thing. And secondly, you already have a policy guide as it is really captured here. So if you are doing anything, it has to be in conformity with what you have already agreed on. We know it's very important to provide an adequate take home for retirees. It's very important. If not, sometimes you find it difficult. This is where people will say, we are retired but not tired. You keep them recycling here and there. It's a major problem. We believe that one should be something, but it has to be in line with what we have as a law. So this is where he was coming from. The response was not adequately explained. Yes. Seven.
Yes. All right, thank you very much. Yes, I want clarity here in key issues. So far, the graph is concerned. I'm not much comfortable. And I want clarity here. By looking at figure 3, shows that 71% of the sampling claims has posting errors, and 34 had summary errors. 17 samples case had both posting and summary errors. I want to put this to the Social Security board and the management. It is a system called Navision that is using it's a computerized system. I want to know who are the developers of the system. 1, 2, how competent are staffs who are doing this inputting? How trained are they to this system? And the third one is, why errors, a huge error in posting? Thank you.
Good afternoon. To start with your first question, who were the providers of the system? I mean, the old system that we are talking about in terms of these errors and so on was actually provided for Social Security by Pristine Consultancy then. I don't know whether some of you had the opportunity to know the late Draman. Okay, they were actually the ones who provided the system for us. Unfortunately, what the system lacked was giving you a notification when something is inputted and that is not accurate, that system lacked that. So that is why we find ourselves in this mess that we are in today. The other problem or the other question that you ask is it a question of competence or lack of competence on the side of the staff? I think when we talk about an IT system, particularly when a system that would hold data for you, I think the best system should be a system that would be able to give you a flag. Let's say, for example, if you are keying in data for Edward, let's take the case of, let's say, contributions. And let's say for the last 3 months, you have been keying in $300 for Edward. And all of a sudden you come for this month and you key in $500, for example. I think the system should be able to query you why the change before it retains it. But the navigation that we're talking about has never been, or is not in a position of doing that. And these are some of the shortcomings that we have realized in the system. And that is why the SSMI system that we're talking about has been, will be in a position to give you all those queries so that going forward, the problems that we have been having will not, will be a thing of the past.
You know, I know this is not a system of free of charge. It's not a free system that you went with Pristine Consulting. If I may qualify this is definitely millions or hundreds of thousands. A whole board, including the management of Social Security, going in for a system. One, this shows that there was no proper feasibility studied in making sure this system is in place, because if developers will come, they had to meet with you people. This is what we want, this is what we don't want, this is what we do. So it's just like you've been carried, develop this ready-made, put it to us, we do it as it is. Then you realize that there are effects in it. As a board and management, what would you say to the Gambian populates of a system that we've seen that error has been generated? And again, you realize that, unpaid, more paid, problems are going in and out, when millions or hundreds of thousands are already in a mess. Now you have another new system. What would you qualify to us that this new one would not be the same as this other one?
Hello, good afternoon. I think there are one or two things that we should take into consideration here. Because when Navision came in, this was at the time, this is not a new system, this is an old system. This is about 10 years, 10 to 15 years by now. And when it was being considered for purchase, I think there was no consultancy done. I think I can agree to that. But the current system we are buying now, we have procured the service of consultants all the way from Ghana and another institution which is looking into the process of migrating data into the new system. I think I cannot give you that, tell you that this system that is coming will be 100% perfect. But I'm quite sure that this is going to be a system which is going to be reliable and is going to give us data or provide data that without even certain interruptions, we should be able to get data that will be reliable in the system, and the public will be very much satisfied with the new system. The first system was devised, in fact, most of us were not even at management at that time. This is a long time ago. I cannot say for certain that I cannot put blame on the management at the time, where there was no consultancy and the system was brought in and developed and put into use. But I'm quite sure that this system coming will give us some better results. Thank you.
Finally, my quick advice to the management and the
Thank you for the advice. You have a follow-up. Okay. Go ahead. Are we together?
Okay, let me just try. At this moment, we are almost 90% done with the consultancy and the contract of the SSMIS. So we were supposed to like go implementation in February, but due to data migration issues, so we have given it another few months. But this year, before half of the year, we should be able to go live with the new system. Before June.
Before June,
yes.
The system will be done.
Yes, and the public will be able to attest to see the differences.
Okay, thank you. I also have a follow-up question to the new system you're talking about. Is it in line with the GBPA procurement standard? Okay.
Thank you very much. Actually, the new system, Honorable made a very important statement. I just have to add my voice to. He's talking about local content, which is very key. By the time I was coming to Social Security, it was already been procured, and I don't think that is factored. But now that you raise it, we will still talk to the consultants to see whether they can look for a local partner here to, if it can be arranged. It's already done and dusted, but definitely local content is very important, and that is the fact. So that it is clear from onset that next we may come and we told that you advise you to look for a local partner, but we tell you is completely done, process is almost finished. But since we still have some time with them, for technology transfer purposes, we'll see whether we can develop something with them to ensure we got the competence in-house. Thank you. And with the second, sorry, I missed the current question. With due respect, can you repeat the question? The follow-up question.
Okay, that was answered. That was answered about the time. The time of at the level of the consultancy, where they are now, and when they expect it to be ready.
Yes, Joe.
Okay. Thank you very much, Chair. Page 22. 4.1.1 timeliness of benefit payments. Now, looking at what the auditors have observed, is according to the laws that governs your institution, payments should have been done within 16 working days from the processing schedule. But I can see that some of the payments were done within 2 months, 12 days, ranging from 2 months, 12 days to 4 months, 15 days. Now, I just want to know what was the problem for this, because it should have been done within 16 days, but unfortunately, it was happening within 2 months to 4 months plus. So I just want an explanation to this cause. Thank you.
Thank you, Honorable. I'll give to technician, but meanwhile, the reason why we put the general response at the end of the report is because of some of these issues, because it is linked. Processing benefits means, for it to be fast, it means your contributions are timely, your contributions are intact, and your terminal salary is also in place. In the absence of a terminal salary, or in the absence of gaps, it becomes difficult to compute, and process payments. In fact, what you have devised as a management now, we feel it's not fair for someone to stay so long after retirement. So now my policy, whatever you have there, once you apply, whatever you have there, whether it's a dime, I give it to you. Then you and I was together, we follow up the employer to pay the balance. When they pay, then we refund it. But our problem has always been that because it's garbage out. If you don't get old person, it becomes difficult. But now we are going around that. But for the details, maybe the technicians can handle that.
Thank you. I am going to break down my my response on the basis of category. Now, when we talk about the National Provident Fund, here we're talking about a defined contribution scheme where people have individual accounts. So you ask yourself, when you talk about individual accounts, what do you mean? It means an account or a number is created for you, for each member, and the contributions coming for those particular members are keyed into their accounts. Now, when we have to pay, it means we pay what is in your account. So you ask yourself, if we're talking about contribution gaps, it means there are periods where contributions are not paid. And I can confidently tell you that for the Provident Fund, up to about 90% of the claims that we receive are not free of gaps, which means we have to follow in for the gaps before we actually pay. That is why, to take care of this delay that people are talking about, we have resorted to taking a decision to say, when we get a claim, we pay what is there, and we follow for the payment of gaps, and whenever we receive those gaps, we pay the differential. Now, that is where the auditors have also picked to say people are being underpaid because they are paid what is in the account and the contribution gaps are ignored. But basically, they are not ignored. What we do is we do a follow-up, and every time we receive the differential, we do a calculation and we pay the differential. For the pension fund, which is a defined benefit scheme, you pay from the pool. Now, again, there are issues again, because we are talking about a system where you have to get both the bio and the financial data accurate. If you don't get the bio and the financial data accurate, then there is a problem. So for the pension fund, sometimes the old policy that we have was you do the processing to a certain point and you send the documentation to the employer, then the employer does some few things which would include providing a statement of the outstanding liability of the retiree and sending it back. But over the period, we have realized that sometimes when we send these documentations to them, for them to just provide that information, it takes between 2, 3, 4, 5 months for some employers for them to just provide that information. And that is why management have also looked at that and said, no, this is not fair on the side of the claimant. What do we do to take care of that? Now, we came up with a policy to say, now what we do is, when they are sending in the claim form, let them send it together with the statement of outstanding liability. And even that is still a challenge on our side. Sometimes they will send the claim form ignoring the statement of liability, and we will still have to get back to them. When we get back to them, sometimes their response they are on time. Sometimes they take time. Sometimes you need to interview people. You call them. It takes them 3, 4, 5 days. Sometimes a couple of weeks. Sometimes more than weeks. It goes to a month or even more than a month. So sometimes some of these delays definitely are beyond us.
Yeah, thank you, Chair, for giving me the floor. I've heard your deliberation. It's quite succinct, but however, I beg to differ in a case whereby I think most of the limitations are at your own end, because these processes, usually, you guys are waiting for claimants to come on board to be able to go and ask for the contributions. But what happens during the processing phase? Like, you guys should have been
up and running with regards to the pending contributions, the areas that are owed to HSFC, whereby even way before the complaints come in, at least a certain portion can be handed over to them. Why wait until the claimants to be able to ask for the...
I can tell you that almost all the SOEs, except a few, we have liability as a token is concerned. And you can show evidence of most of the SOEs, as I'm talking to you now, have liabilities with Social Security. So that we have to court corners to see how do they attend to the needs of those who are recently retired. I don't want to reveal their secrets here. That's why we are saying that now we want you National Assembly to help us, to help us to see a way out, to help us get our money that is tied to employers. That is the truth. So, coming to biodata, I have a case in my table. He's a close brother to me. His name is Mahmoud Kamara. In this form, you have Baba Mahmoud Kamara. You know what? Those nitty-gritties need to be rectified. The biodata is very important. When the employers submit the name of the employee in this form, and later when he retires, it's another name that will show. That has to be rectified. And when it comes to monies, almost everybody have life Social Security. No, only a few of them are up to date with their contributions. And these things must be in place before you can do anything. So you can also make a study to the employers and see, because we want you to help us also. So make it, that's why at the end of that report, we say that you should make it a condition. Social Security certificate should be a determinant of a lot of issues. Just like the GPPA clearance issue. That will solve this problem. We accept liability, yes, because we are not perfect. But I'm talking to Social Security, if everything is correct, it takes only 7 days to get a claim. And that's the KPI that we sign with government. We are so of ourselves. Once all the claims are perfectly delivered to Social Security, 7 days you get your money. The KPIs, I can make we sign with central government. We are just asking why it's not happening, because the blame is two-way. If the biodata is not correct, it has to be corrected. But even if you go to the bank will not pay you. Your this has to be correct. Your documentation has to be right. That's one thing. And your money has to be in place also. So that's why we are now cutting corners. Once your documentation is correct, whatever small money you have there, we make sure you get that. Then both of you will be chasing your employer to pay the gaps. I can assure you, if you help us with these gaps, if no employer has gaps with Social Security, I can also stick my neck that it will take only 1 week for any claimant to get this money. Let's make a deal.
Can I?
Honorable Chair, I want to ask when does Social Security follow these gaps that we're talking about? Is it when it has started, before it accumulates to number of months? And, do you realize that a contribution for a member has not come this month, the following month to the following month, then you make a follow-up as to why it's not coming, or you wait until the person makes a claim to say, I've come for this, and that was the time you realize that there is a gap. We want to know whether you notify employees and employers that there is a gap that is created for this month before it proceeds to the next month, to the following month, or you waited until the claims are made and then you put it to them that there is a gap of 3 to 4 or 5 months which has to be cleared. We want to make...
Hello? I want to make clarification on that. Good afternoon again. What happens is when we say a contribution gap, this is a period we say contribution has not been paid. In the Gambia here, when somebody is employed,
when he leaves that employment, in most cases, Social Security is not notified. So when you go to somebody's profile and see that there is a particular period for which contribution was not made, and you do not know the employee's employment history, you cannot definitely say that this is a contribution gap. So when somebody comes to make a claim, he's going to submit his employment history. I've worked for Ocean Bay from this period to that period. I went to Gamtel, I worked for Gamtel for this period and that period. Then you should be able to know that these are actually contribution gaps. But period of absence of employment, you cannot determine that until the employee opens his mouth and tells you, for this period, I have not been working. So it is not a contribution gap. That is the time we define contribution gap. These are actual contribution gaps. Then we pursue the employers. That is the case.
The month of February, salary is taken. Sorry, the loan pay is taken. March comes, they didn't. And then the instant, we're trying to see whether you have a system in place to know. I work in Gamtel. February is not coming. Do you have a system to alert instead of me coming to Social Security? I work here, I work here, I work here. If there's no system, it means we are going to deliberate here, and this issue, you cannot eradicate it. Because if today there is no system that will be able to qualify that about 1,000 or 157,000 workers of Gambia who are contributing to Social Security, month one, no pay, month two, no pay. I go to GPA, no pay. I go to, Gampetrol, no pay. Then now I, the employer, will go to Social Security, put it to you. I was working in this, I was working in this, then you now follow up. I think we have a problem here. So I want to know, do you people have a system in place? Month one, failure of payment, you are alerted. If that's not the case, I think we work on budgetary issues to make sure those things are done, amicably. If not, this problem that we are talking, we will be here till years, not going to stop.
Thank you very much, Honorable. I think you've hit the nail on the head with the hammer. This is what we have. When I came in last year as chair, we had formed subcommittees, and the IT is one of them, where we intend and explicitly explained to the consultant, this is what we want. This has not been happening. What we endeavor to achieve is you can be in Switzerland and key in your Social Security number and you will know your contribution. We are in the process. We are not there yet. We hope the SSMIS will deliver this urgent need for customers to know what their level of contribution is at any one time. Now, the other difficulty that the Social Security is going through, the hurdle, is that people are not registering. Companies, even schools, are not registering. Now we had a team that is going out to educate, because it is heart-rending for somebody to retire, then walk up to Social Security and you tell them your school has not been registered. Because the person is of the notion that this school was registered and they've been contributing. You see, the problem is with us. When I say us, it's all of us. If I am working and I've not been paid month one and month two, where do I go and complain? You go to your employer. I haven't received my salary. Now the employer might say, okay, your salary is 2,000 or 5,000 or 10, and gives you 5,000. But it should not stop there. What about your contribution to Social Security? Has that been met? The answer could be no. Because he has deducted it by asking you how much, what was your salary, and you give him a figure and he gives you that money. But the process has not been completed by him not paying for your Social Security. I can satisfy your need with a take home, which you can go with, but in the long run, I'm not satisfying your need because I did not contribute to Social Security. And we cannot enforce somebody who is not registered because we don't know. That's why we are asking for you to assist us in putting that as part of the registration. Some schools, to be honest, they have teachers. The teachers are feeling that they are paying their Social Security, but they are not. I'm just picking on schools, but we have seen that in some organizations or some companies, they don't register. You just bump into them, oh no, I just opened my outfit just 2 months ago. When in actual fact, they've been trading for more than a year. You see, that is, we have, it's a complex issue, but we're still battling with how to resolve it. And one way is to have this certificate of clearance, which we think, if you go to the AG's chambers to register, they will ask you to go and bring A, B, and C documents before they give you a registration.
Thank you. Thank you very much. Can we move to page 31? Oh, sorry, 30 continues to 4.1.4. Determination of benefits for the Federation Pension Scheme claimant. I have two questions in it, but I'll join them together. One is this: in accurations of payment, monthly determination, as you've alluded here, the table below shows, saying claimant salary, where salaries is changed for a few months to termination. I want to get clarity here. As per your mandate, what timeline in terms of claimant payments would you determine? Is it, for example, I work in Gamtel, as I work in Gamtel, a senior manager, a year later I am promoted to a director. So serving my 1 year, I'm retired. How do you determine that increase in payment? Because I want to qualify this. Sometimes you said, when they said there is notion that maybe the Social Security is having that I am about to retire, let me adjust, the salaries adjust in order for my retirement claimant benefits to be paid. So I want to know on what category of agreement or level of payment that you could accord onto the person, either 6 months or 1 year or 3 years before retirement. I want to qualify this in order for he or she to be paid. The second thing is underpayment, overpayment is done to claimants or individuals. How do you settle the underpayment, and how do you make sure you determine that if I'm to get 2,000, I am paid 4,000? How do you, target on me for me to be able to give back what I don't owe? For example, I am overpaid. My payment is 4,000. I am paid 5,000. What mechanism do you put in place to make sure that overpayment is withdrawn and also underpayment is paid? I hope it's clear. Thank you.
Fortunately for us, we realized, or when we looked at the issue, we realized that these were people who were entitled to periodic pensions. When I say periodic pensions, I mean monthly pensions. And what we did was we negotiated with them to say, look, we had some issues when we were calculating when we were processing your benefit. And this is what happened. Now you were overpaid by this amount, and it should be recovered. Now, we understand that it was not your fault. The fault came from us. But we are also of the view that the money should be recovered because it's not something that you were entitled to. So what we will do is we will spread the recovery period over a certain period so that we recover from the periodic pension that you are due. And for those few cases, we were able to strike a compromise and we recovered through monthly deductions. For the cases of underpayments, these were cases where technically what happened was we used the last schedule that was available to us only for schedules to come later, and we realized that indeed you should have been paid a certain amount that you were not paid. So it's just a question of us trying to do the calculation and we pay the differential. But again, there you will realize that it was not a deliberate attempt. What we did was we relied on the available schedule, only for some schedules to come later where we realized that indeed the amount that we used based on the schedules that were available was understated. So what we do is we do the calculation and we pay the differential. That's the only thing we do.
That I've been an individual who is overpaid. Social Security didn't even inform me and determine my acceptance rate in which it might be a 2,000 added to be paid within 2 months is all cleared off, and my take home is also a very poor whatever. Allege, I'm saying, how do you allege this? That claimants are saying that this is what sometimes happens on the Social Security. They will not even be put into, as you have said, a discussion. How would you qualify this? Is it so?
Yeah, thank God you said Alec. As far as I am concerned, since when I took over and this thing came or became a mandate or that I am responsible for, I think I have been doing justice to the system and I have been doing justice to the people that I serve. What I do is I tell you plainly, even for the cases of underpayment, what we do is we notify you to say, well, this is what is happening, but we will calculate and we pay you the differential. We make sure that we inform them. Because I mean, to me, I think it is not fair for me to just proceed and start deducting without telling you. Because I mean, I should also be conscious of the fact that you have a family to take care of. And you have financial obligation to that family. So if I proceed without informing you, I am not doing justice to you, and I am not doing justice to the system. So I think it is my responsibility, and it is the responsibility of Social Security that we tell you prior, before we start deducting, that we are going to do X, Y, and Z, and we are doing X, Y, and Z because of 1, 2, 3. And that is what we have been doing.
Some members are alleged, saying, yes, I'm informed that I am underpaid. But yes, for me to get my monies, members will be falling until they are tired. Those areas will not be paid on their suitable time. But the suitability time of the Social Security are limited. What would you qualify?
Okay, Honorable, you spoke very well, and I like this because any of us could fall victim. So we are all in it together. So it's not a matter of social security against them. We are all in it together. But you see, you are very right. You caught us. We overpayment we hardly do. Underpay we always do. Yes, because in money you have to make sure you don't overpay. But underpayments are not. It's not entirely our fault also. Because if an employer did not pay your money, we cannot pay you. And if you follow with us, your employer still did not bring the money, we cannot pay you. So maybe that's why they spend a long time following up their monies. Easily.
Yes.
Honorable Jallo, Samba.
I think just a follow-up.
Samba.
Because of the need of the pensioner or the guy who is claimant, a policy has been made that whatever is in his kitty,
Can you use the mic?
sorry, whatever is in his kitty, you will receive that. When the payments come, rather than waiting until it is 100%, then we pay you. We have devised a method that we will give you what is already in the kitty and tell you follow up. We will also follow, but it is good for you to assist us so that Mr. Joyner can come forth with the difference so that I will be paid. You see, the other thing is the employee themselves who at times don't cooperate because they are afraid to go and meet their former bosses to say, from this period, never paid anything for me. They see that as confrontational, but it is not. It is your due. It is what you should get. It's for the employer to understand that you are not confronting him. You are asking him to settle what you should earn. We have seen some outfits that have closed, like the tourist industry. A lot of bars employed some people. They were paying their salaries, but just went under either because of poor customers, because of COVID or whatever. They are not operational, but they have not informed the institution that we are out of business. So we cannot meet X, Y, and Z. You will be calculating that I have been here for 6 months, and 6 months I'm not working, or 7 or even 18 months. And then you come for your claim and we tell you, look, all we have is for 6 months. And you say, no, I've been working. You see, so that is, we're in a catch-22 situation. But as I've said, we have developed a new policy that what's in the kitty, you'll receive. And that is where the underpayment is coming from. Notwithstanding, we will still follow up for the differentials to give you a complete 100%. What? I don't think we have. Do you have a still?
You see, we don't have a time frame, but sometimes when you read between the lines, you are able to realize that something fishy is happening, and what you need to do as the person responsible is to seek for some clarifications. Like, for example, if you're talking about a payment rise, that is not across the board. You understand? If the payment rise is not across the board, of course there should be some documentary evidence that would actually show that Mr. Gomez is benefiting from a payment increase. But if you don't have that documentation to show that Mr. Gomez is benefiting from a payment increase, and the payment increase is not general across, it's not giving across the board, then people will be suspicious to say, well, something wrong is happening somewhere, and I definitely need some clarification. And if you request for that clarification that is not forthcoming, or it is coming and not convincing, what do you expect us to do? I mean, that is beyond us. One, sometimes you talk about payment increase while that payment increase is not reflected in the payment, in the contributions that are paid. What do you expect us to do? Now again, if you say Mr. Gomez payment or Mr. Gomez salary has increased from, let's say, 30,000 to 40,000, it should reflect on the contributions that are paid, because the contributions that are paid should not still reflect the 30,000 that is all salary. It should reflect the new 40,000 or 50,000 salary that you are talking about. But if the contributions do not reflect that, then I mean, we are not obliged to take it as a payment increase. So these are the things that you have to take into consideration for you to be able to reach a conclusion. I don't know whether the issue that motivated the National Audit Office to do this audit, whether it is taken care of. But if you look at the report in general, sometimes the report tells you what I observed from the report. There is some weakness in the system. There is some laziness in the system, because there are certain issues. The issue of posting summing errors, for me, I believe is either laziness or incapacity or whatsoever. That's what the report actually is telling us. These things are in place. So MD, you just came at the Social Security. This one is a comment. Maybe you will add on it. What is your take on these issues? Like for example, where the World Bank tell say you don't protect the interests of your pensioners, I will relate it to one of the audit findings that is on page 26, paragraph 2. If you go to page 27, where it reads, from the National Provident Funds, 27 claimants, 42% who were affected by the contribution gap has written to Social Security to sacrifice contribution gaps because of frustration, delay caused by recovering such contribution from the employer. This is an issue. And then you have made mention here, MD, most of the SOEs are having an issue with Social Security. Being a member of the public enterprise from 2014, if we in those days, if we are considering report, we even ask paying slip of the staff. But what you normally know, the payroll, their payroll. If you look at all these PEs, they deduct the 10% of that the employer is supposed to pay, and the 5% of the employee. You know, that is the National Provident Fund. All these SOEs, they will deduct this thing, and at the end of the day, they will not be paying it to Social Security.
It happened. Because the reason why we were requesting the payroll is only to establish if the company is paying to Social Security the amount that is due to the staff. So I don't know what normally happens with Social Security. If institution defaulted paying their security, what is your act saying about it? Do you have the power to take them to court? Because the first institution that I work in this country, when I went there, I found that Social Security took that institution to court because they were not paying their staff. So I don't know what is your act saying about when institution defaulted paying, because this is the only way you can protect the interest of your staffs or your pensioners. Then my other question would be on page 42, where you make a lot of investment and you couldn't recover the funds. That is the issue of Galia, that is the ferry and the Qatari investment. Then the police barrack, the GCCA, the GCC loan, GRTS loan. So I don't know, I know this were executive directive, because being a member of parliament or almost for 15 years now, I have passed through all these issues. But what is the position of Social Security up to now? Because these are funds. These are people funds. So I don't know what is your position now. I will take like the two ferries. I think they are still here. And then the Qatari investment is that, how to call, when going to around Steencon. Yeah, that establishment that is there. So I don't know, it is that you don't have the power during your contract negotiation, whether it was a contract, but there must be a formal written write-up to say that, okay, this money is being given to Mr. So-and-so, or whether there was no collateral attached when Social Security was giving these monies. Yes, Chair, I would reserve the other two questions until when this one are answered. Thank you.
Thank you very much, Honorable. I will start with the last question about investments. Actually, from the real world, I don't not call them investments. Actually, investment will be where the corporation working on their mandate to invest the funds to generate revenue for the pensioners. But this way, like this capital is imposed, so I will not call them investment. Actually, they were the directive given to the corporation at the time, maybe because national interest or whatever. And can you use the mic? They are not. I will not call them investment. Thank you, Honorable. Sorry, I will not call them investments from the real sense of the word. They were imposed actually, maybe because of national duty, national interest. They could justify elsewhere, but as far as we are concerned, I don't see them as investments. We didn't come from within management; they came from above. Notwithstanding, we are doing our best with the Qatari investment, the GFFI. We're working on it now with other partners, because it's the source and ports and then Gam Petroleum. We tender it now. We are working on it to make it a viable investment. And for the loans, I understand they've been making for the government, and I did not give up. I still pushing the monies that government owes. Will I get it back in cash or in kind? But I'm not giving up. But that's what we are doing. All we can do to get what we can get back. With regard to your first question, which deals with contributions, I don't think there's anything in the act. I don't see that one was to take people to court. But since the case is being revised now, I think it's something that we can consider. But we just have to point out the fact that the SOS, most of them will deduct their staff in the payroll, but the money will never hit Social Security account. That you have to note. So what I did when I came new, I taxed the operation department. I gave them a target in which if they achieve, I'll motivate them. I'll allocate them all because I didn't have a vehicle at the time when I was coming. And I stopped my vehicle from being procured. We procured vehicles for operation department to go and chase our monies outside. So we're working vigorously with everything possible to get our monies. The only control we have, when people pension, they come, we tell you there's no one to go back to employer. But that is also very very disheartening. So it's a difficult situation actually. So now with regards to the controls to get our money from employers, I think that's why this August body can help us a lot. I'll give it to the technicians or the chairman to say a lot more on it.
Honorable, I'm very pleased with your comment. In that, looking at the list, all of these companies, most of them, are in existence. The thing is the willingness to pay, and that's what we are fighting. The willingness is not there to pay because it was an executive directive. But my concern is, if an executive directive gives you an asset that you are still using and making money from, why can't you not pay for that? That is my bottom line of my question. Case in point, if you look at the GCA, it's the fire tenders, the fire trucks, and the ambulance. They are always present at the airport when flights are coming in or when flights are going out. You need a fire truck. If that wasn't provided for, Gambia would have been shut out. But they are making money on the fire tenders and the ambulances, but they are not willing to pay. They are saying we did not secure it as a corporation. I think you understand where I'm coming from.
Can I just clarify something? Yeah, your first question talks about people waiving the contribution gaps. I think what we need to understand here is it's a constitutional mandate. And because it's a constitutional mandate for people to be registered and contributions paid on their behalf, it is obligatory. So because the constitution or the law, the act does not say people have the option of either registering or not being registered, then it means contributions should be paid, whatever. So it means they don't have the right to waive those contribution gaps. When we receive letters saying, I am giving up, say, I'm not interested in the contribution gaps, for us, we take it to say we will process what is there and we pay you, but it is still our responsibility to make sure that we go after the employer, for the employer to pay the contribution gaps, and we pay you accordingly, and that is exactly what we have been doing. It is not waived in any way. When we come to contributions, non-payment of contribution, as we talk right now, quite a good number of employers are owing, including the PEs, and in fact, including the central government on the side of the ICF. So, I mean, if we are to actually pay on time, it means contributions should be paid on time. And if we are to accurately pay contributes to pay benefit, it means contributions should be paid on time and schedules are there that would reflect the actual salaries of the retiree so that we are able to establish the salary, that is the terminal salary, and because we are able to establish the terminal salary, we are able to calculate or to process accurately and pay benefits accurately. So if all these things are missing, some things will happen along the line. And that will mean we are exposed to certain risk. And those risks, of course, would include being not being in a position to be able to establish the terminal salary. And because we are not able to establish the terminal salary, we run the risk of getting a mistake in processing some claims. These are things that are interlinked. They are all interlinked. So, I mean, it is a question of us, it is a question of people complying. And how do they comply? They should register and they should make sure that contributions are paid on time. And because they are able to pay contributions on time, schedules are there for people to rely on to be able to determine X, Y, and Z is here, and this is what is in place, this is what we should use to compute, and because we're using this to compute, when we use that, we will get the accurate amount that we should pay. It's not rocket science.
Sorry, I think it's important here to note that there is an established Social Security Tribunal where contributions are pursued, whether they are gaps or normal contributions. This is where they are pursued. So there is that tribunal where contribution gaps are being pursued. So we go to the courts to pursue employers on Social Security contributions.
Yes. You have a follow-up to that question?
Executive directives here, we want to know, because according to you, you must have an act which is definitely there, which should dictate who has the power to give a directive. Currently, we are on we are looking at a bill which would definitely address the issue of executive directives. It is not only Social Security, probably when it comes to executive directives of investments, but then the way we are trying to look at executive directives, when I started talking, I saw the board chair laughing about that, but it's a very serious matter. What I'm trying to say here, when I started talking, I saw you laughing, but I want to say this is a serious matter when you say executive directives, and you said you have a challenge in the responses. It says, however, we need to put this into context because we are affected by the impact of the various executive directives amounting to 2 billion in principal recovering, of which is still a challenge. And these are executive directives. You are telling us that that is a challenge for you to recover that. So don't we have a law that should tell us who gives us an executive directive? And executive directives, they are given based on what? Like to say executive directive can be given on this if it is in line with your core mandates. Is that not in your act? To say executives are giving us this directive to do this kind of an investment amounting to this much, and still you're having a challenge to recover that. And in fact, some of these are PEs too. So I want to know which executive has the power to give a directive to Social Security to do something. Is it a minister or the president?
May I just come in here? I was chuckling because the time frame is very much in context in this when we talk about executive order. This was at the time of Yahya Jammeh. And you know what befalls you if you fail to do that. We have seen people arrested, thrown in jails, or even lost their lives. That's the context I want to put in front of you. These are not things that are happening now. These are things that happened in the 22 years. You dare not say no. You dare not. You see, that was why I chuckled. I think the essence here is for us to look at the context. This is the context during the Yahya Jammeh period. Sorry to say, but it is still in our books. If we have not written enough, it is still in our books, and we are pursuing it.
Mr. Chairman.
Yes, sir.
I think it's important for him to emphasize this particular area, because we remember Yahya Jammeh is gone almost 2017.
Yeah.
And we're talking about 2018 to 2021 review. Even up till today, you have these things in your books. They are not written off, and you are unable to reconcile it with the auditors, which means they are portraying a serious negative picture of your institution. Do you understand? And as the head of the board, the chairman, what other strategies do you have to address this thing to avoid them continue keeping on them on your book?
Thank you very much. The reason why we are leaving it on the books is to make it relevant to the institution. If you take it out from the books, it means you had forgotten about it, and your let me comment, your profit will have to be taken. I guess the auditors know that. They would give you to say, look, you have to write it off and take it against your profit. But that is not what we want to do, because as I've said earlier, I alluded to the fact that these are companies or SOEs that are still in active delivery of services. It's just that the denial factor, which we have been trying, we have used all type of cajoling to get them to respond positively, even if it is $5 a month. It will take you closer to the end. But saying I'm not going to because I did not do this, but you are using it. If you don't use it, yes, I would say yes, but you are using it, you are making money, and yet still you don't want to pay the corporation. You see, that is my problem. That is my problem.
Let me allow him to talk.
Honorable Chair, this was anyway, you've highlighted that it is found in the reports of very recent. And my question, your response to my question, I want to clarify. Are you telling us that directives to do these works were given by President Jammeh?
It came from the office of the president.
By the time?
No.
But you found records indicating that these directives came from the office of the president?
Yes.
Have you make a follow-ups to recover these monies?
Yes, we have with the Ministry of Finance and Economic Affairs.
Can we be provided with evidence of these follow-ups?
Yes, because some of them have started paying.
Okay, thank you very much.
Thank you.
Abla, you still have something? No, let him come. Honorable Njai, come.
Yeah.
Final one. Don't be the final.
Just want us to shift a bit. It's almost in relation to what we are saying. If we could go to page 42, that's 4.2.2, on the administrative expenses of the National Provident Fund. So here is stated that the pension evaluation report for the Federated Pension Report by the World Bank, it does indicate that 10% of their contribution on administrative costs should be nothing beyond that, nothing above that, sorry. So there was a benchmark, the Social Security National Insurance Trust of Ghana, and from there they were able to decline their percentage of contribution on revenue and administration from the from period of 2017 to 2020, from 16% to 10%. So here we are seeing that upon review of the financial statements for the period 2018 to 2021, it has showed that the Social Security has spent between 13 to 23% of its contribution on administrative and staff costs. So I would like a clear elaboration as to why exceeding the 10% mark, because here it's saying from 13 up to 23%.
Thank you very much. It's a good observation. the college they use as a benchmark also started from somewhere else, and gradually they are improving. And we are also improving because at the time I know what I have from reports, so it used to be more than 50 to 60% cost, but gradually it is coming down. So, and secondly also, you look at some macro level issues. Employment rate and stuff like that. Sometimes you are better off getting a moderate margin on your investment and employ more people than you leave employment rate to go very high and make money. Sometimes these are the scenarios that management is faced with. But the fact is, gradually, even the KPIs we sign, we have been tasked to make sure we bring down the cost, and then we are working towards that. Thank you.
Yes, thank you very much. I have two questions in regard to the pension registrations. Who is responsible for the registration of pensioners to the Social Security? Who is responsible? Two, after the registration is done, who is responsible to follow the contributions of various institutions to the Social Security?
Thank you very much. Very simple. The employer, once you employ a staff, you fill out what you call SS1 form. That is so that you employ a particular staff with the relevant details, the biodata, the passport size, birth certificate, and all those details. That's usually with the employer. For us also, since we are also looking for money, we also chase them to pay their contributions. But it's their duty to make sure they pay their contributions. But we also follow them. I can reveal that the ferries currently, as we're talking now, was close to 50 million on pension area. The ferries. You know, I don't have to go that far. So it's not like we are not full. We are pushing vigorously, but you have a big challenge that not only Social Security, but you have to come and help us together. Because one day we'll all retire, so that we have something in the kit if you retire. But the duty is both the employer and Social Security. And for our part, I can assure we are doing. But the more money we have, the more we invest. And I just revealed to you the fact, some internal policies that we do, sacrificing myself. When I came to Social Security, like I told you, they are supposed to procure a vehicle for the MD and the DMD. When I came, I stopped it deliberately. When I had a meeting with them, they told me, we need a sort of professional vehicles. I stopped everything. I told them, now, we're going to buy a professional vehicle first. Leave my vehicle. And I taxed the professional director that, how many people do you need a day to do your job? He said 5. I told the HR director that, make sure you get 5 vehicles. Even if it's my own vehicle, give it to him. Go and get money for us so that we can invest. So we also do our part. We are playing our part, but we have a challenge, and that's why we need to come in. To make people pay money in this country sometimes is difficult. And you're talking about the cost of operation. I think the National Assembly should also take up next to look at the cost of admin cost of the other P's and see. Then you'll comment us. Thank you very much.
Thank you, MD. I think the first question is very important. And I know you do the follow-up. By law, who is responsible for the institution to register their staff with Social Security so that these payments can be done? You are responsible for the follow-up, but who is responsible for them to comply in terms of registering with Social Security?
Hello? Okay. The responsibility of registration of employees and payment of contribution is that of the employer. What Social Security does is to facilitate that process. Where employers have issues to do with registration and payment of contribution, we can give them all the necessary assistance. That's why we have a compliance team. We have an inspectorate that runs around pursuing employers who are not registering and paying contributions. So if you do not register and pay your contributions, we have to take you to the courts so that you pay the contributions. But we facilitate the process where you have difficulties. That's why we have the inspectorate. And we have vehicles, and we make sure that they go out every day to the field.
I quite understand the dimension in which you are coming from. But I know this is a government policy, and it's in the labor laws. Every staff in this country, the Social Security need to be paid. And that dimension, like I'm thinking of if they are not forthcoming in terms of payment, do you have any partnership with the government to make sure that these people are registered and they are paying? This the dimension in which I'm coming from. And I know it's mandatory for a staff to pay these things. That's why that is happening. So what is your relationship with government to make sure that they comply to the fullest? That is entailed in the labor laws of the country. I know.
Yeah, that is why we take them to court. But going to court is also another dimension, because I mean we've had examples of cases being taken to court, and they languish at the courts. Right now, we have a case that has been there for more than 10 years now. So I mean, we are doing everything possible. Like, for example, you talk about the registration here. Who is responsible? Like my colleague said, we facilitate. And that is why we are doing everything to make sure that the inspectors go out to the field. You can imagine the cost implication of it. Not only on overhead cost for payment of salaries, but the vehicles, the fuel, the maintenance of those vehicles, and so on. We are facilitating it. But sometimes the information is just not there. Because we have seen cases where people will register or they will connive with employers not to register. So you only depend on information that you get. Sometimes if the information is not there, it's like maybe people will feel that you are not doing enough. But the information that you need to rely on so that you get to them to enforce is not forthcoming.
Thank you so much. I think we have, wait. Mr. Chairman, I think the national audit, the performance audit, is a welcoming initiative that all of us need to embrace. And what motivated them is clearly captured in the report and the scope they cover. There are major findings that are already highlighted here. There was a healthy discussion for us to go back and front. And I know this has started, is going to be part of us now to continue with this performance audit. So in a nutshell, if you look at it like the major findings from, the scope is from 2018 to 2021. And already as a corporation, Social Security, you have established at least 16 days processing time, which is almost 2.5 months. But even if you look at the findings, especially with the National Provident Fund, which they highlighted, it's only 7% that has been covered and 17% for the Federated Pension Scheme within this period. And going forward from 2021, we are almost in 2023. When you are in receipt of this report, I believe there should be a significant improvement in addressing this problem. So like you come to the other aspect that is talking about inadequacy in determining the benefits. A shortcoming also in the collection of contributions. So all these things are highlighted. So going forward, we as a committee, we are very much interested in you giving us the implementation report in addressing this. One, an attached timeline to this thing. When do you intend to complete all these things? Particularly the issue of recovery. Though I know it has been an executive directive, as you rightly mentioned, but you have some physical structures which your money is used to establish those things. And currently we have a government in place. Then we also want to look at the implementation report with regards to recovery, as he rightly said, especially with regards to the follow-up correspondence, if we can get them. So these are the areas that we're thinking that going forward, we will get those reports, implementation report, timeline attached to them. I think before we conclude, we'll give you a timeline when we are expecting these things. Notwithstanding the national audit will also make a follow-up. We as a committee will go to the respective places to see the implementation report you're giving us. Is it in line with what is going to be obtained on the ground?
It is found in the audit report. The auditors highlighted, according to our interview with the Department of Finance and Investment, the investment.
Can you direct us to the page?
Page 39. Page 39. On the rate of return is not provided in 2021 activity report, paragraph 2. Are we there? It says, according to our interview with the Department of Finance and Investment, the investment committees were last active in 2018. Why? That was first question. It says this was because of the changes in corporation's leadership. Therefore, investment decisions were taken by the board based on the recommendations made by the managing director and the investment department. I want to know how changes of corporation's leadership affects the investment, because when we say changes of leadership, is it the changes of the managing director or the entire management team? And because what I do know or believe is that changes of leadership is for individual to go and individual to come in, but office equipment and operations, as far as policies and everything concerns, remains. It does not affect any of that. So I want to be clear how the changes of leadership affects the investment of the corporation, if that can be explained.
Good afternoon again. What we meant is here that before we had an management investment committee in which before there are the committee will have to meet, decide on what investments to do before anything is done. When there was a new management that came in 2018, because of the investment team, they take too long, because you have a team of about 8 people trying to meet, argue, and before they decide on what type of investment. Some of these investments are short-term and they are limited by time frame. For example, bank time deposits and treasury bills and all those things. To always meet in order to decide. So they limited it between the managing director and the investment team to just make these very fast decisions in order to make the decisions, investments. But it did not affect the investment returns in any way, because it just makes decisions faster. But now we have gone back to having an investment committee, both in the board and also in management. So it was just for a period, and now everything is back to normal. But it didn't affect the returns in any way.
Honorable Chair, it says this has impacted negatively on the ability of Social Security to effectively undertake investment that maximize returns for the members. So it has an impact, which is indicated here. So it says its impact is very negative on your ability to effectively undertake investments that maximize returns for members. And I want to know this change of management. I want to be clear about it, the change of leadership. Is it the change of the managing director? If it is the change of the managing director, are we saying what has the policy tell us in a situation managing director has changed? The decision for such investment lies in whose hand? Here you've indicated, therefore, the investment decisions were taken by the board based on the recommendations made by the managing director and the investment department. Which managing director? So are you saying the board was not able to properly implement this investment? But the investment plans have not changed. Like, this is what we have to invest on. The priority areas were still remained, and those are areas where investments were done.
Honorable, if I may come here.
Thank you.
Honorable, can I come in?
Okay, yes.
Yeah, I don't think you made once you say noted, it means it's okay. I think that's an entire, we learned from you today. Even in time, we had some issues among ourselves to defend what they said. No, just say noted. You give a comment later. So, but this point, I don't think it is in order, because that was the time that Social Security made the highest profit in history during Manyan's time. So, if anything, that this one he took, I think it is in order. All that he did is to fast track this one, because Social is like a bank. If you have to go for a time deposit, some of those are competitive. It's time bound. So if you have people who don't have any clue in finance, aid member team internally, you want to sit them and then spend a lot of time on investment. I don't think it's in order. So what happened was it was just stimulate. They have a department for investment specialists whose area it is, who look at this investment, bring to the main director, and then they work on it. So I think that is in order. But now the new board has come up with a new strategy whereby they have a board subcommittee, and now they're making thresholds for investments, where that can look at departmental level, at board level, board level. So it's been a portfolio mix. So it's been properly organized. But if anything, that decision taken by the then management, I think, is the best decision ever, because it has minimized the time that you needed to take decisions on investments. That's all it did, actually.
Okay. Thank you very much. Page 38. Can I continue?
Come
like a bank. Then something came to my mind. Are you thinking, now we are living in a world of, in a digital world. Almost I can say 95% of your pensioners are with their smartphones. So are you thinking in that direction to have a digital platform where almost all your pensioners will be having their their account in their mobile, so that they will know how much money they have at the Social Security?
Thank you, Honorable. Yes, that's why we have the SSMIS.
Last.
We are now digitalizing our operations, which was supported by the finance director. It's about to be launched. If it works, you can just sit in Yamina or in Sandu or in Wuli or in Kato. You just point your phone, you know whatever you have. But it is gradual. Now, COVID had good and bad sides. The good side of COVID is Social Security try to encourage people to be going through the finance systems. We will some challenges with that one, but gradually people are cooperating now. Now we using UNA and BIBA and others to pay people. They don't have to come to bank to get their money. You can just go to, but even that is a challenge. So it's gradual because you looking at the level of the people also. But our objective is to be as much as efficient as the banks, and this SMIs will do just that for you. In that the issue about gaps will no move there. You can just punch. You know the A and B has this month. You can just call them. You will probably not pay for this much months. You better for them to pay before you retire. That is it. Thank you.
Yes, final question.
Page 38, the last paragraph, just on top of figure 5. Now, looking at the corporation's interest payment to members, 2013 to 2015, interest were paid ranging from almost 0.2% to 0.5%. But when we come to 2016 to 2019, there was no interest paid to members. I just want to inquire what was wrong.
Okay, in the issue of interest is like the provident fund members, they operate an account like a bank account. And at the end of every year, we calculate the interest or the returns on the investments, and then we give it to them. And we call it interest. For example, if we make 200 million, we decide to give it to how much we have as in their accounts, and if we share it, that is the percentage. So the percentage is derived on the amount that we have and the returns on investments. So since those investments that were directives, that 2-point-something billion, those investments were not bringing in any returns. So it means there were investments, but the returns were zero. So it means they didn't earn any returns on their investment. So the investors, it's like they're investors, but they are losing. So we couldn't pay them what we didn't get. So we decided to suspend the payment of interest and just keep their money and try to diversify. So what we did was we provided for those lost investments. So after 2017, when there were no directives, we started investing the monies very prudently, and we started making profits and returns came. So we started paying back interest. So from 2020, we have started paying interest. In 2020, we paid 84 million. 2021, it's already audited, so we are paying 117 million. And hopefully 2022 also will pay more than 200 million.
Thank you so much for the response. Can someone move a motion for them to start that for 5 minutes? We have it down this one. Any motion here, 5 minutes. No, five.
Second.
Any second now?
Second.
Mr. Chairman, can you allow us to have some internal discussion with regards to the for 5 minutes? Pardon? Not because of our fasting. provide us with an implementation report by 31st of March 2023. An implementation report. Are we together? The report also should contain each findings. When do you intend to address them? We want a timeline attached to the findings that are embedded in the report so that it can be contained in the implementation report that you are sending. And if possible, you can also copy the National Audit Office. They will be doing the follow-up, and I know our next batch of engagement will also be coming to you to see what is obtained with regards to the implementation. Do you have anything to tell us?
Thank you very much, Honorable Chair. I'm not a giant nor a Joven. I've been kept here from 11 o'clock to now without food. And I know you have a canteen, but that's okay. Thanks.
Yes, thank you so much. May I seize this opportunity to thank you and your entire team for the patience and also the cooperation that you have manifested throughout the engagement. We are indeed sorry we were unable to provide you a food because most of us are fasting too. On a more serious note, we really thank you and we hope to engage you in making a follow-up with regards to this. And don't forget the submission, you have to submit before this date. That's the 31st of March 2023. And also within the implementation report, you can give us the timeline for addressing these major findings that are embedded in the reports. And other than that, I want to wish you a safe journey back home, and so that you can find the food on the table. But next time going forward, we'll look at it strategically. How can we work on this thing? I know it's not easy. We also, in the same vein, we want to thank the National Audit Office that have been here with us from the morning up till today, patiently listen to all the engagement after giving a wonderful presentation of their findings, which we really appreciate. Going forward, we will encourage this performance audit. I think it will be very critical in putting our PEs on a firm footing. We really appreciate, and we will continue to advocate for the continuous audit finding. I think this is in fact more, to me, is more effective than the annual reporting format. This one is very useful. And we want to thank the Directorate Unit and the project representative that are also patiently with us. I know they are very hungry. We will apologize for not providing the food. Then Director of Committees with the support staff, honorable members, good afternoon to you all, and I thank you for the effective participation. It has been very interactive. I know some of them are very good in questioning, but sometimes we have to have a limit for it, because I know the question might not be exhaustive. Anytime you ask a question, a response is given, it gives you another idea. But thank you for cooperating with us. Can someone move a motion for us to adjourn? Not sign under, till the next session. Honorable Cisse, second. But this is a demand from the